All right, let's see. All right. All right. Good morning. Good morning. Good morning. Good morning, and welcome to the Russell Journal. I am Russell, and it is like 5:30 in the morning, and I'm not quite awake yet. We got ourselves a nice little set of coffee. It was a French press that I turned into a coffee cup. Anyway. All right. This morning, the markets are up. Russia pulled some troops off of the Ukraine border. And so we got a big move to the upside. The market's not completely afraid. We'll see if this means that bull rally is back on, but there's a pretty good chance it will be in the event that all that stuff works. So that's good news. I would say we should probably then talk about my trades yesterday and jumping into we're going to jump over to Webull. We're going to talk about my trades yesterday. We're going to talk about my balance. I see. I think this is the problem. There we go. I see what happened. I do see what happened. All right. Give me 1 second while I work out the freaking difficulties here. I see what happened. See if anybody. There we go. All right, we're going to jump into that. There we go. There we go. Well, we'll have to figure that out in a minute. Well, gang, I apologize. I didn't mean to do all this. Had some technical difficulties. I did wake up a little bit late. I'm going to try and not do that from now on. All right. So let's kind of look at this. All right. Balance this morning, $711.45. I do need to look and see what our options buying power is going to be for today to sort of give us a target that's over here on this little device. Options buying power today is $411. Ugh. I dropped that. Professionalism. Woohoo! Okay, you can see from yesterday, from yesterday. I'll show you the balance and how much money we actually made. Okay, so we are up $711. That's where we're up from. Yesterday, we placed 3 trades, earning us $75.64. Okay. We had 3 trades yesterday. All 3 of them were winners to varying degrees. And we will go now to the chart. We are going to just jump into that. Okay. Again, like I said, it's not rocket surgery. It's brain science. The market is up because the they pulled troops off the border. Okay. All right. Where are we at? We gotta go IW. This is QQQ. Nobody likes QQQ. Not right now. IWM. Okay, so zooming in. Need to zoom in more. Give me 1 second. I'm gonna get this set up. Plus, I'll give you guys a chance to get in here. All right. Okay. I guess I can get rid of that thing too. All right. So, opening trade yesterday. We came in here off of, okay, so we came in, things pulled back to the 50 EMA. We did not enter here. We watched for the rise up to the 50. And then when it came down to this 50, that's where I entered my first trade. Rode it from the 50 EMA up into this area here. When that candle began to wick up there above resistance, that's where I cut the trade. That was, I believe, a $30 win on that. I'm going to be very careful not to actually tell you how much money per trade I win, how much money I make. They call it a win, but I don't like winning because it makes this seem more like gambling. And the amount of work, this is the hardest I've ever worked at gambling in my entire life. Okay. So from here, though, I immediately flipped short. Okay. Rode it all the way down to here. This was my short call. As we came through the 200, this is where as we came through the 200, this is where this dotted line here is the 200. This is where I exited that position. Again, that was about another $30 win for that. And then I will roll over here because there's something I want to show you that is pretty crazy. Okay. So, again, looking to sort of repeat some of this stuff. We get, is that it? I think that's the spot. No, that wasn't it. This is it over here. Where did we go? There it is. This is it. Now, this is what I want you guys to see because this is what we call, it's a bear trap. All right. I'm going to show you. I'm going to move over here. All right. So the first thing on the chart, see this, you've got this like really long period of consolidation in here. Okay. That's pretty strong, but you've got this mingling of all sorts of stuff going on here. Okay. And then you get this really big drop, right? And it's again, you see some selling, but see how the bold line, that's our 50 EMA, finally comes under the 200, the dotted line right there. And not on top of that, you've been trading within this top trend line here and this bottom trend line here. We came out of that trend line for a break to the downside. Okay. And we didn't get a continuation of this past that 199 spot right there. That one, it's like 90. Yeah, I don't remember. 90. Anyway, I've seen this before. I've been tracking this. It happens about once a day, and it happens 3 or 4 times a week, where they have this pullback. It looks like it's going to really take a move to the downside, and then here, if you look right here, you get this like massive blast off up. Okay. This is a bear trap. It happens again pretty frequently on IWM. I haven't seen it happen on QQQ or SPY as much, but it definitely, the head games happen here on IWM a lot. And I've been caught in this. I've been caught short at this moment recently, actually, like twice. I got caught short recently where it looked like it was going to go up, reject the 50 and go down. Okay. And part of that is if you're in the early hours of in the early trading session, a lot of times you'll see it go up, reject the 50 and then do a continuation, but you don't see this later in the day. Typically later in the day, typically you see shorts looking to cover. You're also looking, the other thing that is always going to happen, especially because we are in, so they don't call it a bear market, and you can't look at the chart and see that it's a bear market 100%, but you are technically in a bear market. Most of the stocks that make up all of your ETFs, over the over half and majority are already under their 50-day moving average. So you are, for all tentatively speaking, you are in a bear market here with the majority of your stocks. Again, it's not a technical bear market as right now. It's kind of just a fundamental bear market. We don't know what the future actually holds. Although for a lot of companies, the outcomes do at the moment seem pretty good. We will see what inflation does to that, to their outcomes, and what their actual earnings are going to be, their real returns. But again, so coming down, when we broke below the 200 down here and we broke out of that trend, I went short here, which was tough because, or I went long. I'm sorry, I go short. We kept falling. I went short down here, right at the bottom of that candle, but I held because I knew what was going to happen. And the only thing is, I don't know the tops, I don't know the bottoms. Okay. Then we came up through here. We got this move to the upside. Again, in this, then the app actually froze up. I would have made a lot more money off of this play, but the app actually my broker froze up. The chart stopped developing, and I stopped seeing the price action. I could watch the action on the level 2s. And because of that, I actually had to exit the trade because it was no longer safe to be there. And a lot of this is because also here we noticed that this, again, shorts covering in this area was what this is. And that can only go so long. And without any bulls to give you any follow through, you really can't trade this. Okay. So yay, that's life. All right. So those are the 3 trades that I made yesterday. Again, very technical trades, very, very logical, not a lot of emotion. And all of this sort of chop through here. Okay. If you are a trader, you make your money in all of this. There's volatility. That's where you make your money. You can't trade a flat market, and if you in a market that's just going straight up, well, then you put on a bull trade, and you go long, and you just stay long for as long as you possibly can. So there's no real trade within that, within those rises, and so we're at this place where that's it. That's all you got. So going forward into today, let's go look at the pre-market and the after hours in the pre-market. Kind of get some sort of perspective on what's going to happen today. Okay, pre-market high is 204.70. Coming down below that, they're cooling it down. So all of this is indicative now of some type of bull rally where, again, you get the gap up into the morning, back up here, top is 204, pulling back. Again, you're going to see a couple of things happen. Is one, there's probably not enough traders or not enough money in the pre-market to keep this up here. This will be a point to be interested in where you get this, if this 50, and this is on the 1 minute. So the 50 here crosses underneath, it'll pull the pricing down, because most of the money coming in here buys based on the averages. Okay. And if you can get at a 50 average price that's below the 200-day average price, then you did good as far as they're concerned. All right. So this is what we're looking at as far as things. Now, again, this shows me that there is bullishness in the market, though. Okay. We have a bit of bullishness in the market. They're ready to run this. They've been ready to run this. They've been ready to continue the bull trend and get back on things. The other thing is, although Bullard came out yesterday and was hawkish and pretty hawkish in his comments, the Fed didn't come out after their emergency meeting and go, oh, hey, we're just going to go ahead and raise rates now. So we didn't get that. And we didn't get anything about a 50 basis point raise. Okay. The last thing that we will go check out is we are going to go check out Market Watch, and then I got to go because we got to trade and make this money. Where are we at? I need to go, not there, here. Market Watch. We should be coming into the PMI data. So we're going to go here. We're going to look at the producer. Okay, so we get retail sales comes in at 2.1%. Wait, okay, so we don't have retail sales. We got 830. We should have that. We should have all of those. All right, guys, I don't have Market Watch hasn't updated the things. This is all pretty important. Retail sales is for January is going to be important, and the reason, again, because of this business inventories down here, which doesn't come out till 8 or 10 a.m. Okay. And then, wait, is this today? That's Wednesday. What's today? We get the producer price index. Ah, there it is. That's why we don't have it. I thought that was until tomorrow. Okay. Producer price index comes in at 1%. So it's up. Cost of producing goods is up. We expected that. Again, yep, everything is up. All right. Okay, so let's go back to here. I'll go transition this. Everything is up. The PMI being up is not good. That's bad, especially because we see the inventory starting to rise. So tomorrow, the retail sales will really give us a clear picture as to how bad things will be. And we also have the FOMC minutes. Okay. Yes. Okay. All of this is sort of making a clear picture to me. Okay. So Russia backs off Ukraine just a little bit. They pulled some troops. Great. Okay. Then tomorrow, going into tomorrow, you have the FOMC minutes. Okay. Because the Fed didn't come out after their emergency meeting yesterday, I guarantee you that the bulls are thinking they're only going to get a 25 basis point raise in March. Okay. And that's still for March. They're not going to do an emergency raising of that. So I think the bulls have got it now. And as long as those FOMC minutes don't give them any nasty surprises, they're going to run it up. Now, this will be a case then of buy the rumor, sell the news. I'm definitely looking for long trades today on that fact. Options probably expiring tomorrow. Going to look for probably to be in the money instead of at the money or out of the money trades today. So that is really what I am looking for as far as all of that goes. So again, we're going to buy the rumor today. We're looking to go long. Really want to look at those long positions and get a shot at them. That will be fantastic. And ahead of those FOMC minutes. Now, again, there will be some stuff that could derail things tomorrow. So I'm not going to hold through tomorrow because we don't get the FOMC minutes till 2:30 in the afternoon Eastern time, or about 11:30 here. So we do get the retail sales numbers for January. Okay. One of the things that we've been seeing is a rise in wholesale inventories across the board. And if those retail sales are down, that means that consumers are starting to reject those higher prices, and businesses, the guidance for earnings and the pricing power that businesses think they have, they will not have. Now, this gives us a lens like 6 months down the road. So we can't super trade on this data. Investors can invest on that data and on that sort of foresight. But as of right now, we're kind of looking to, we'll see some pullback in that. We'll catch some of that volatility to the downside tomorrow if those retail sales are bad. And obviously the producer manufacturing index, that's going to tell us how much producers are spending to produce the goods that we're making. It's also going to tell us how much goods they are producing. We're going to see those productions be up. They'll be making more than they were, say, during the pandemic. But what they're going to do is they'll also say it costs them more money to produce those goods. That has to be. And it has to say more now than it said before. Okay. Now, the one thing you will know about PMI and about the producer manufacturing index, it leads CPI data, okay? Because they spend money, those guys have to spend money to produce your goods, okay? Then when they spend that money and those rates, that stuff costs more, right? They pass that cost on to the businesses, okay? Now, if we see a pullback in the PMI data, there will be a move. If we see the cost of their production going down, we will then see eventually you will begin to see a fall off in inflation rates from the CPI data next month. Okay. But they produce things first, then they sell it. So we can't consume it until they sell it. So their price is going to come first. Okay. So if in January they spent less money producing stuff, it means that in February, our cost of goods will go down, should go down. Now, there's going to be some lag in here because companies will probably tend to raise prices quarterly. And the other thing that I think is really sort of messed up is those companies, once those prices are typically up, they're up. I remember being a kid and we could buy a candy bar for like 30 cents. Then I went to 50 cents. Then I went to 79 cents. Then I went to $1. Then went right more and more and more. And then the candy bars got smaller and smaller and smaller and smaller. So you spent more money, got less candy. And the thing is there's never been a time where you all of a sudden get more candy and it costs you less. Okay. Same thing. I remember, we had in the 90s, we had this point where there was a day when we had like 99-cent gasoline, and then it went way up, got over $2. And like I've seen it under $2, like $1.99, but it's never gone back to that 99 cents a gallon ever again. Okay. So, really looking at it, I'm saying, even if the PMI data gets less, I don't know what that's going to do to the CPI data, because there's no way to, the prices on the consumer end typically don't go back down. So we will see, but it does give us some indication of some of that. All right, guys. With that, for the Russell Journal, you guys, I'm Russell, and I guess pretend I said some sort of catchphrase.